to the overhead. Okay, so if you remember, this is the problem where we had the 3 different inventory accounts. Do you remember what those are? Good. So we've got raw materials, work in process, finished goods. Right? And I'm going to set these up as T accounts. So if these are all asset accounts, which side goes up and which side would make it go down? Good, yeah, this would be the plus side and the minus side. Okay. Right, so the very first thing we did, right, we bought, there was no beginning inventories, but then we purchased batteries. Where did that go into? Raw materials, right? So the very first thing is we added to this account $640,000. And I don't really have room to do both there. So like I said, whatever you're comfortable with, either journal entries or T accounts, I don't care. But that first journal entry to buy raw materials is debit raw materials. And then we're just going to say credit cash. Okay. And then the next thing we did was what? We pulled those out, and where did we put them? What did we pull the batteries out for? Some went to selling expense, and where did the rest go? Good. So we pulled out, so this is number 2, we pulled out $608,000 worth. Right? And the ones that went into the cars that we're going to sell went over here. And then the ones that went into our employees, our salespeople's cars, are going to end up down here. Is my math wrong here? I can't see. 608, 8. I have a, oh, this should be 600,000, right? Yep, sorry. Right, so when we pull out raw materials, some went to work in process. Some went to selling expense. Right, and expenses work like assets, right? We increase them with the debit. And then those came out of our raw materials. And then what happened? What did we do next? Right, we finished some of them, right? So we're going to move the ones that we finished out of work in process over to finished goods. And so this would be our third transaction. And we moved over, this is where the 540 comes in.
I'm just curious, why do you do DR for
We don't know.
Oh,
That's the real answer. Somebody decided that that was the abbreviation at some point.
okay.
Yeah, no, that's a good question.
It was like doctor. I thought you said it was doctor.
Oh, did you guys not see this in financial?
No.
Oh.
This is the old thing.
I'm sorry. Okay, well, I'm glad you brought it up. Yeah, DR just means debit and CR means credit. I'm surprised you never saw that. Okay.
I just kept reading it's like doctor work in progress, doctor still experience.
Okay, don't, no, it's kind of like a social experiment that nobody asks me until we get down 10 lines or whatever. That's interesting.
No one was very good except for Ruben.
What's the worst that can happen? It's,
Miss Johnson has to get Brian.
well, I'm going to go tell her. I'm going to go ask her. How am I gonna do that? Now, that's interesting. I'm surprised that actually in that other textbook that it didn't show DR, CR. Anyway, anything else here that doesn't make sense? Is everybody okay to this point? Okay, thank you for being brave. Okay, so we've now finished some stuff. Now what happens? Huh? We sold some, right? So number 4 is we're going to pull these out of finished goods. And what amount do we have there? 378,000 of those. And where do they go to? Say that again, Ian. Cost of goods sold. So cost of goods sold is an expense, right? So it's also a debit account. We increase it with the debit. So luckily, all these accounts we're dealing with, the pluses are on the left-hand side. And then we would just, that's all that happened, right? And so then if we just wanted to figure out the totals, right, we just subtract. So for example here, that 32,000, what does that represent? Is this the number of batteries that I still have? Is it the cost of the batteries that I still have? What is this? Is it the number or is it the dollar amount? It's the dollar amount, right? Because I think I still have 4,000. Is that right? Because they cost $80 each? No, I have 400. Right? I have 400 batteries left and they each cost me $80. So just to be clear, these are the dollar amounts, right? We've got $60,000 worth of batteries sitting in work in process. $8,000 of sales expense. Whatever number this is. 6. 1. Is that right? So where, on the financial statements, where would I find this number? Assets, right? This number. Also assets? How about this one? Also assets, right? The 3 of these are all inventory accounts. So they'll actually probably be totaled up on the balance sheet, right? Where will I find this number? Income statement, right? Because it's an expense. And then where would I find this number? Income statement as well, because it's an expense. Good. Questions? Is everybody okay? On the income statement, yep. I personally think that the T accounts are easier because you can see the flow better, but whatever works for you. Okay, so we talked about the fixed costs already, right? Fixed costs stay the same in total. Right? Okay. So on here, I'm going to like put a big star here because later in class or sometime in the next week, you will forget that fixed costs stay the same in total. It sounds totally obvious, huh? Within a relevant range, yes, that is true. But you'll smack yourself in the head later because you know that this is the case, but you're going to tell me something different, okay? So let's move, we didn't get to variable costs, right? We stopped at fixed, okay. So variable costs stay the same per unit, but they change in total. Okay. So the example we'll use here is the potatoes from our potato chip example. So if I say over here is going to be my total cost of potatoes, and we'll make the x-axis the number of cases of potato chips. Right, and then we said that this is also called the activity level. So how much do you think, we'll say, a bag of potatoes, what do you think a bag of potatoes costs?
$7.
We'll say $7. That's a big bag of potatoes. Okay. So if I don't do any, right? If I don't make any potato chips, the cost of that is 0, right? So I'm right here. What if I make one case? What is the cost of that one case of potatoes if it takes me one bag of potatoes? $7, right?
Why is it 7? Yeah, I was gonna say, it just made us.
It's arbitrary. We just made it up.
Oh.
So what would it be if I needed 2 bags? Okay. Right, we see a theme here, right? You're going to end up with a straight line that I didn't do nicely, but anyway, right? So the slope of this is 7, right? For every one I go over, I go up 7, right? So notice the total, right? As I make more, as my activity level goes up, the total cost is going up, right? But what's the cost per unit if I make 2? What's my variable cost per unit if I make 2? 7, right? What if I make 100? 7, right? So the variable costs stay the same per unit, right? Okay. And again, this is, if we think real world, it's going to cost me, don't write this down, right? But if it's going to cost me more if I'm only buying 2 bags, as opposed to if I buy 1,000 bags of potato, I'll get some sort of discount, right? So there's a relevant range here too, but I will only give you problems within the relevant range.
I think you need a challenge.
Huh?
I think you need a challenge.
You want me to do it outside the relevant range? Okay, okay. That'll be extra credit.
I think you have to.
Okay, so then we're going to move on to mixed costs, which have a component of both. Okay, so mixed costs are not the same in total. Or per unit. And the best example that I can think of for this is your cell phone. So if over here is the total cost again, and down here is your activity level. Right, so I don't know if any of you have or have ever experienced, a cell phone plan that's not unlimited data, right? If you have unlimited data, then it's just a fixed cost. But if you have a plan that's not unlimited data, right, they charge you a certain amount. We'll just say $100. Right, but let's say you go over your data, I don't know. I'm just going to say, you get to this point and they add on another charge, right? I mean, these numbers are also arbitrary, right? But that makes sense, right? You have this fixed cost until you get to this data point and they start charging you a ton for that extra data that you use. So if you were to look at it, right, your total costs don't stay the same and your cost per unit don't stay the same, okay? Okay. So let's just make sure that this makes sense. If I tell you, let me write a couple questions down and you think about them. So as activity level increases, I want you to think about what the total fixed costs do. Okay, so let's think about these. As the activity level increases, what happens to your total fixed costs? Do they go up, go down, stay the same? Good. What about as your activity level increases, what happens to total variable cost? It goes up, right? Good. What about as your activity level goes up, what happens to the fixed cost per unit? Right, goes down. Good, right? Because we're spreading that cost over more units. Right, didn't we talk about the roommate situation in here? Yeah, as you spread your rent over more people, right, the fixed cost per person goes down. As your activity level increases, what happens to your variable cost per unit? Stays the same, right? The potatoes cost $7 per bag. It doesn't matter where we are as long as we're within the relevant range. Good. Questions? Everybody okay? Okay. If there's no questions, we'll keep moving. So here you have an example, and I'm going to give you guys like 5 minutes and see if you can fill in this chart. wherever there's a question mark. So if it's not clear, this is asking for the total fixed cost, total variable cost, and then the total cost. Okay. So What is the total, what is the fixed cost? What is that? What are we paying for? Just to put it in context of, huh? What do we think it is though? Like what would be a fixed weekly expense? Rent, okay, good. You might have said that, I just couldn't hear you. So this is probably rent, right? It's not changing. And then we have variable costs. What do you think that is? What kind of variable costs might we have? The coffee. Cups, things like that, right? So what did you get for total variable costs here? Right, and how did you get that?
2 times the cups of coffee.
Good. 0.22 times the quantity. Good. So what'd you get here?
462.
And then 462. Oh, sorry. And what's here?
484.
Thank you. Is everybody good to this point? Okay. And then we just add them together, right? So we should get 1640, 1662, and 1684. Right, so then the average cost per cup of coffee, right, you just take the total cost and divide by, what do I divide by?
Cups of coffee.
That is nice. Good. So we might have rounding differences, but somewhere in that neighborhood, right, is what you should get.
Divided what?
By this number. So the 1640 divided by the 2000. So is the cost per cup of coffee going up or going down? Why?
Economies of scale.
Can you be more specific?
Because the fixed cost per unit is increasing in number of units.
Right, as we spread that fixed cost over more units, it's going down, right? Okay, so the most important thing here, like kind of moving forward, is remember how we talked about the potato chip bags, how we can't price the potato chip bags at just the price of the potatoes, right? So same thing here. If this is costing me 22 cents a cup, right, and I didn't look at rent, then I would say, oh, I can charge 25 cents for a cup of coffee and I'll make a profit. But I won't, right, because I've got to take into consideration this rent, right, which is essentially manufacturing overhead, right? So just know moving forward, we have to consider all costs, otherwise we won't make a profit, okay? Questions? Everybody good with this? Okay, so now here's where the tricky part comes in, this question at the bottom. I want you to take a minute and think and see if you can come up with a solution, but don't yell it out. Anybody want to make a guess? We'll keep voting. Guess?
Which one over there?
This,
Very last one?
this one, yeah.
$1,800.
Okay. Thank you for being brave again. Anybody else want to be brave too? Or vote for this or make a different choice? Okay. Huh? So who's voting for this? You're voting for that? You're voting for that? Okay. Honestly, what's the worst that can happen if you're wrong? I make mistakes all the time.
Isn't it 60 cents? It's a fixed cost.
Huh?
It's 60 cents, it's fixed.
So what number are you going to give me then?
I think it's the 60 cents.
Well, it's asking for total fixed costs. Okay, so anybody else want to vote? Huh?
No, yeah, that's, I'm sorry.
Jacob? We're not done. You're not done. So this may or may not be correct. Do you have a different number?
I keep getting 12.
Okay.
Yeah, you haven't moved on to the second one yet.
Yeah. 2,700. Okay. So I know there's more than 4 or 5 brave people in this room.
No, yeah, it is 1,200.
1,200.
I'd like to rescind my vote on this one.
1,200. Did I ever get yours, Olivia?
1,200.
Okay.
Should I change my vote?
Yeah. Anybody else in the 1,800 camp want to change their vote?
Can't read.
Okay, this is correct,
No, there.
right?
You kidding me?
How did you figure that out? Right, it tells you, right, that the fixed cost per unit is 0.6 and the number of units is 2,000. That equals 1,200. Remember I said that you were gonna tell me the fixed cost change? It doesn't, it's gonna be this. So if they tell you what the fixed cost is, believe them, don't change it. Okay? You're gonna have a homework problem where you're gonna wanna do this, don't do that. Fixed cost stays the same no matter what the activity level is. Okay. Questions? Is everybody? Okay, so I think you guys read about this. Right, so the whole point of managerial accounting is so that we can make decisions. And so there's a couple terms associated with that. Right, so one set of terms is relevant versus irrelevant costs. Right, we know that if something's irrelevant, it doesn't matter, right? If something's relevant, it does matter. And so we're going to talk about differential costs and revenue. So if you're trying to decide between option A and option B, you want to know what the difference between those two are, right? The difference in the revenue and the difference in the expenses. That's differential. Does that make sense? Just the difference. Then we have costs or revenues that change as a result of, blah, blah, blah. Costs or revenues that change as a result of making decisions. Costs that have already been incurred do not impact decision making. Okay? So I'm going to give you an example of this, and this is like a real life example. So let's just say that you have spent $60,000 on tuition over the past 3 years. Okay? And you are in the summer coming up to your 4th year, and you're trying to decide if you should go to college for that 4th year. Okay, and it's going to cost you $20,000. Is the question, do I want to spend 80 grand to get my degree? Or is the question, do I want to spend 20K to get my degree?
Some cost.
Hmm?
Some cost.
We're dealing with some costs.
I don't know.
You're right, but so which of these is the appropriate question?
They're both proper ways to look at it. But you've
Mm-mm.
already spent
The money. So the second one is better.
So this is the one that you're asking. Do I want to spend 20,000 to get a degree, right? Because it doesn't matter about the other 60. There's nothing you can do about that. Does that make sense? So we had a family member who did this. Their son went to ACC, spent 3 years, they spent whatever amount of money. But he didn't really know what he wanted to be, so they're trying to decide, should we send him to school or not? And they're like, well, we've already wasted 60, why would we spend 20 more? And my thought was, you've already wasted 60, why not spend 20 to get a degree? So they didn't send him back, so now he's got 60,000 of tuition and no degree. This is the appropriate question, right? Does that make sense? You can't do anything about this. But people get all like emotionally tied up to this, right? It's like, I don't know if this is relevant to you, but it's like if you dated someone for 2 years and you're not sure if you should keep dating, but you've already invested all this time, it doesn't matter, right? What matters is tomorrow. So anyway, it's this, the incremental cost is what matters. Okay. So that little space on your thing, costs that have already been incurred do not impact decision making, and they are called sunk costs. They're sunk, you've already spent them. Sunk. And then we have this thing called opportunity cost. My other classes, you guys have already learned this. Have you guys learned opportunity cost? What is an opportunity cost?
It's sometimes a tangible, not as a tangible cost of taking the money that you
Right, right. So, right, an opportunity cost is the cost of what you're missing out on by choosing this, right? So if you're sitting in this classroom, you've lost the opportunity to be binge watching some show right now, right? Or to sleep in. Okay. So the opportunity cost is the whatever you're missing to make the other choice. Okay. All right, so just to keep you guys on the same track as the first class, I'll let you guys go, and we will finish this last part on Monday. So I hope you guys have a good weekend.
We don't have any homework.
Yeah, the homework is listed on campus. Yeah, I did.
I looked at it on campus and I couldn't.
That was actually the easiest one I've done.
I know all the homework. I just like, they just like completely wrong. See you, bro. No, she doesn't accept it. Like, yeah. I'll let them. I'm not fighting my Thank you. Thank you.
Thank you.